Hi, so in this video we are going to look at another major part of the process, and that is highs and lows. So there's a very specific rule I use to determine what is actually a valid high and what's a valid low, because if I look through the chart here, just to give you an example, so some people recognize this is a high, this is a low, this is a high, this is a low, this is a high, this is a low, and so on. Um, there are highs and lows within here, but every high and low has a specific task to do. So depending on the time frame that you're looking at, you can determine what is valid high and what is a valid low based off the role that it has in play. So the simple rule is the goal of a low is to create a new high. If that low fails to create a new high, it's a weak low, and the expectation is that it will be ran. The goal of a high is to create a new low. If it fails to do so, then the expectation is it's going to be ran. So if a low or a high does its job, it's then considered a strong low or a strong high. So what I mean by this is, if I go into a higher time frame on this, just to clean it up a little bit here. So this was a previous high. So the market ran up from here. Actually, you know what? We'll take this one. This is probably a bad example to start, just in terms of explanation. A little bit more technical, but we have a high here, so broke a high, and this low created a new high. So you can see here, this low ran through, made a new high, and this high, in a technicality in this case, and it's good to see as an example, it technically made a new low, but that low did not close below this previous low. So I don't actually consider that a valid break in terms of what this is doing. This is still a strong low, but then because this low created a new high, this is then considered a strong low. So what I do is, looking at my time frame here, I'll take my line bar from the points and I just pop them on the point. I right click and I will say this is, what are we looking at, a 4 hour. That's a 4 hour strong low because that did its job. So then price comes up higher, fails to make a lower low, but this low fails to make a higher high, so that's weak. So in this case, prices ran. So you can see it doesn't need to necessarily close. It just means it's ran. So the liquidity will either be taken from this or it will be closed below. But because this is the low that made the higher high, which is the highest high in this range here, this is still the valid strong low within this range. So then we'll say, well, we look at this, we mark this off as our break of structure. So if I drag this all the way across to where the close is, which is here, what is the lowest point that made this break of structure? And it is this one just down here. So this is the lowest point that created that break of structure. So this is our new strong low. So I can then highlight this, that's a 4 hour strong low, and then price continues upwards. So then we have a high, we have a break of structure, and then we need to find the lowest point within that created that break of structure, which is here. And this is now our new 4 hour strong low. And again, just to keep repeating the process here, we have a high. This is probably a news event. It could be FOMC or something. Generally that's on a Wednesday, so I would assume this crazy candle here is FOMC. Didn't violate the strong low, pushed higher, failed to make a lower low. We have a break of structure up here, so that's our 4 hour break of structure. And then what is the lowest point that created that break of structure here to the upside is this low here. So then we can mark this off. That's our 4 hour strong low. So within this, price comes down, violates it and closes, but then gives us an instant reversal out of this. So again, this could be liquidity based off something that was happening on the day, and that's absolutely fine. To point it out, a higher time frame is always stronger. So if I look at this on a daily chart, let's just try and find this here. So where we had it was, oh, I know what this was now. Actually, let me go back to the 4 hour because this is a nice example. So yeah, what we have here, and this is where a lot of people would have started getting short. This low candle here was the day that Trump came out and said that he's putting massive tariffs on China. The market actually tanked on that Friday. Oh yeah, it was a Friday, so that was the Trump tariffs day, which actually made a tank. And that maybe got a lot of people short until we started this range here. That could have been quite difficult to trade. But on a daily chart, let me just see this here to show you. Or actually, probably what would have been stronger was a weekly way to look at this. So if I think it's starting to turn direction, I'm going to keep going up a level in my time frame just to see what's happening on the next time frame up, because that will really give us a clear indication of how markets are moving. So you can see there was a break of structure. There was a strong weekly low here, so that wasn't just a 4 hour, that was a weekly strong low. And that was determined in there, so that wasn't broken. So because of that, I was on the short time frame, I was technically bearish, but overall I was bullish because I was still like, well, it came down to the order block that created the higher high. Price just retraced and the strong low was still protected there. So if we go back to the 4 hour, that's just a nice thing to be aware of when you're looking at these things. And you know, with practice and time in the market, you're going to get used to seeing these things and figuring out why the market, you know, although people are saying it's a sell-off and like billions were wiped off from these two candles here, it doesn't necessarily mean the market's completely changing direction in terms of what we're looking at. So we just need to go up to the next time frame and see where's the violations happening, and is it just bouncing off a higher time frame order block. So we'll see here. Price came down. Let's just go through the process again from here after. That was like, you know, one of those black swan events where something mental happens and it just tanks the market. That's the biggest down candle in any given period of time, in such a short period of time that we've had for a long time. So big black swan event. You can see market comes up and sweeps this high. So because we have a low, failed to make a higher high, we can say within the internal structure, because this low wasn't broken, this is the low that failed to do its job. So it was a low high and then it failed to push that high, and you can see because it failed to do its job, the market swept the price. So market swept liquidity below that, price came down, and then it continued higher then to create that break of structure. So we have our break of structure here. That's our new 4 hour strong low. Where are we going? Strong low. And then to continue, we have an uptrend, a lower, and so on. Moves up, higher, lower, higher, lower, higher. So we have all these lows and highs here that are that's kind of consolidating here on this one. But you can see the process in there. This applies across all markets. So if I go into gold, for example, let me just remove these drawings. So you can see this is a really nice trend here, that will give you a good indication of what's actually happening. So we have a high, and we have a strong low there that created that high, moves up, makes a higher high, break of structure, and then we have our strong low, and same thing just applies. I'll just go through this chart just to show you all the steps. There's a high. What's the lowest point that made that high? Is this here. That's our strong low. So then we have another break. Oh, wrong one. Another break here. What's the lowest point? And you can see everything is just getting protected in this entire leg. There's a high here that's broken. Then we have our protected low, and comes across here. We have our new protected low just down there, and so on. So again, going through and identifying the lows that are going to be protected. What's the purpose of this? It gives you a really good indication of where your stop loss is going to be. Because if you know a high or a low did its job, and you can utilize those lows and put your stop losses below them to basically manage that as a stop loss, because you know that if it does violate that, there's probably a chance, a higher probability that you're wrong and the market's going to reverse. So yeah, really nice to run through. And again, like I've said in previous videos, price is fractal. So with that, the same rules apply in a lower time frame. So let's say, for example, let me just see if I can find a good example here just on gold. Price violated this high, but it didn't close. This is not going to be a great example, but we'll use it just to see if I can find something in here. So price swept the highs of this, and then on a 5-minute chart, we'll find what was the lows that did its job. So we had a run up to a high here. Price closed. What was the strong low? It was this one here. So price violated. I could then find the order block that it came from, which was here, and you can see there that there's a probable entry. I could switch down to a 1-minute chart within that block, try and find an entry off of this. So price comes up, makes a low, makes a higher high. This is a little catch out here. So I probably would have got stopped on this one and lost the trade. There's a break there. Then we see if there's another entry, it comes back up, makes a higher high, and then we can see it actually plays out in this scenario. So you can see there, price comes up, there's a break of structure here, that's a strong low. Price comes down, violates that low, and yeah, I don't really have an entry in there, to be honest. I could have got short on the close of that candle, but you can do that. I don't really like doing it, but there's no real entry pattern there for me. And anyways, price comes back out to sweep up. Let me just see what happened there in the higher time frame again. Okay, yeah, so sorry, that's bad for me. The higher time frame needed to be viewed. So this is our order block here. So what's the last bullish candle that swept through to create the bearish candle? Is this one here. So this is our order block. You can see this candle, and again I'll go through this in more detail later on. So that's just bad observation for me. So yeah, you can see there, price comes in, we have a break of structure. So this would have been the actual trade that would have been valid. So you have it here. There is a down candle, change of character, back up, doesn't violate that high. Technically I would have probably entered this off these range of candles here, so I would probably went in off the first candle, to be honest. So I could have said there was an entry just here on this line, put my stop above the strong high, and target potential lows there. And does it play out? Yep, plays out. So that's an annoying 4.3 to 1. So that is how long is that there? That would be a very sideways 3 hours. But I'm looking at this trade here to see, right, it came up, made a high, made a low. There was then a break of structure out of this just down here, closed below that low, closed below this low, confirming the direction, pulls back up into the order block here. So you can see that there, pulls back up. Then we get finally down here a full change of character, and you can see once you get those breaks, it tanks. You get a pull back up into this range here, which I think is probably coming off the low of this candle. Yeah, we're straight up into the low of that block. And again, you could see here that once it hits that range, you have a break, pull back up, and then a short from there. So yeah, I kind of went off course there a little bit in terms of strong highs and lows, but you could see as a really good example there why it's important to define the task that a lower or high is doing. Will again bring a massive amount of value to your game when you're able to employ this with breaks of structure and changes of character to define the different highs and lows that these objects came from. And then you can start basing your trading plan around how you're effectively going to trade these levels, which again I'm going to get into in future videos. There's a lot of more videos that are going to come with this as well. But again, practice that, get used to it, get your eyes trained up to seeing them on the charts, and that's going to again just up your game and up your levels in terms of how you're going to trade the stock market.